watch out for this market curveball. Strengthening US dollar might seem like good news, especially if you're holding stablecoins or dollar-based investments like US bonds, but it could spell trouble for risk assets like crypto. So stick around as we dive into just how high the dollar could actually go in this video and what it could mean for risk assets if it does. I know what you're thinking. Guys, what's going on with the dog coins? We're going to talk about how that's going to affect your dog coins. Don't worry. So why is the dollar suddenly pumping like it's just come out of the gym? Like, let's go, bro. Pump it. 3 words. Strong U.S. fundamentals. While the rest of the world's economy is tiptoeing around recession talk, Uncle Sam, Trump's America, is doing laps, man. Economy's booming. First up, the labor market. Even though job growth has cooled off a bit in July with just 73,000 new jobs created, as non-farm jobs, which was way below the 115,000 that were expected, the unemployment rate still held steady, 4.2%. Now, it's not the record lows, but it's damn low, and it's close enough to record lows to be noteworthy. It's certainly not pumping, is it? And get this, even with a few revisions to previous months, the Fed still not panicking. They see the market as balanced, which is central banker speak for we're not cutting rates just yet. There's no beating in August, but maybe they'll cut in September. Odds are increasing dramatically for an August cut. Long-term unemployment ticked up to 1.8 million, but that's still manageable in the grand scheme of things. We must remember that a strong labor market also means more money for consumers to spend within the economy, aka to buy dog coins, okay? And speaking of the economy, a growing GDP is a favorite measure for economists to say, well, everything's fine and dandy. The U.S. economy clocked in at 3% growth in the second quarter, which is very strong growth for a major economy like the USA, beating the 2.3% expectations and surprisingly outpacing most developed nations. America's back, baby. According to the Department of Commerce, this has all been powered by a major turnaround in the trade balance and in renewed consumer strength. It's working, essentially. And then there's the interest rate game. Right now, the Fed's target rate is sitting at 4.25 to 4.5%. Papa Powell is basically on cruise control, refusing to cut rates, signaling a wait-and-see approach. Labor market cooling off, perhaps more than expected, may finally get them to cut in September, but prediction markets have been dramatically wrong before, even though they're saying now is a very high chance of a cut. Now here's where it gets spicy. Even though the Fed controls short-term rates, it influences but doesn't directly control long-term yields like the 10-year Treasury. These are set by the market based on expectations of future inflation, Fed policy, and economic growth. So when the Fed keeps short-term rates high and signals that they'll stay that way, investors, they demand higher yields on long-term bonds. Otherwise, why would you lock up your money for 10 years, man, when you can just get juicy returns in the short term? That's why the 10-year yield is hovering around 4.25 to 4.5% currently. And when U.S. Treasuries are paying high, which is backed by the world's most trusted government, looks like a pretty sweet deal for global investors, especially compared to European bonds or Japanese bonds where the yields are crazy low. We're talking like 1.5% or whatever. This means demand for U.S. Treasuries is high. People need dollars. The dollar gets stronger. All of this puts tailwinds on the dollar. Whenever it rallies, risk assets like crypto tend to get a little bit wobbly. Now, to be clear, Trump wants a weaker dollar. He thinks that a weaker dollar is more beneficial for U.S. trade and all that kind of stuff. He's not actually a strong dollar fan. He wants a flexible dollar, let's say. So while your stable coins might be chilling, all this could mean, of course, a bit of trouble for the cryptocurrency markets if the dollar starts to signal huge strength. Before we get into that, guys, if you're trading these cryptocurrency markets, you got yourself an account over on BitUnix. Best place to be trading crypto. I'm trading most of my futures trading over there. And here's the deal they got going on right now. Of course, it's, as usual, available to everyone, everywhere. No KYC, no VPN, no BS. Deep liquidity in all the big coins. But right now, you can go straight to VIP level 3. Use the link right down below here. It's a 30% discount on your fees. Plus, you can get up to $8,000 plus 3 Ethereum. That's insane, man. Almost $20K in trading bonuses. Bonkers, crazy deal. And you can get a $400 cash back deposit bonus. So you deposit $1,000, get $200 back. Deposit $2,000, you get $400 back, man. Easy peasy, lemon squeezy. Link down below. Go check it out. Thank you very much. Now, How long can we expect any kind of dollar rally to ask? It showed a lot of weakness recently, but will it start rallying and pumping like crazy again? Well, it depends on who you ask. JP Morgan sees the US dollar facing some headwinds in 2025 due to slowing US growth and tariffs, and despite still attractive treasury yields. They expect the euro to strengthen noticeably, with the euro USD pair moving towards 1.19 by late 2025, meaning the dollar likely won't stay as strong as some might think, which is good for risk assets. JP Morgan also admits the dollar is overvalued, which Trump would definitely agree with in this scenario. An April report says that the dollar's long-standing overvaluation is beginning to unwind, which is very positive for risk assets. In fact, they say the dollar could see a 10 to 20% decline against major peers such as the euro and the Japanese yen over the medium term. That's, let's say next year and a half, something like that. That's, again, very bullish for risk assets. Cambridge Currencies sees the recent USD rebound, the DXY, near 103.6 in July, as a short-term bounce, not a new uptrend. The dollar remains overvalued, trading about 2 standard deviations above its 50-year average, and it is hitting key resistance around 96.6 to 97.6. Still strong fundamentals like liquidity and global trade are supporting the dollar's long-term role. Now, a potential rebound could start in Q4 2025 or early 2026, depending on Fed clarity, depending on inflation data, depending on labor market data, all that kind of stuff. Key events like August inflation reports and global elections affecting momentum here could come into play too. For now, the dollar appears near a short-term floor, but faces a lot of technical and event-driven uncertainties, all of which could result in a weaker dollar, which is good, again, for risk assets. Now, let's take a close look at the DXY, which, in case you didn't know, is the US dollar index. It measures the value of the US dollar relative to a basket of major foreign currencies like the euro and the yen, the pound. Well, the DXY has seen a short-term bounce. Right now, it's not showing a long-term strength, okay? It's in a clear downtrend, and that downtrend has not been broken. It has consistently been printing lower highs and lower lows. Right now, it's facing serious resistance on its recent rally, not just from the 20-week EMA, but also from a horizontal level that has acted as strong support for years, meaning it's not resistance. Okay, the classic support resistance flip. Zones like that aren't easy to break. It's going to require some big momentum behind the dollar, which again is what they're exactly trying not to do. They're trying to take the momentum out of the sales. Weaker dollars was wanted here. So why does this all matter for crypto? Simple, because there's a clear inverse correlation between the DXY and Bitcoin, therefore your dog coins, okay? When the dollar rips higher, Bitcoin and especially altcoins tend to suffer. When the dollar drops, that's when crypto gets room to run. And it's not just about technical charts, it's about liquidity, baby. It's always about liquidity. A strong dollar tightens financial conditions around the world and risk assets get choked out. And over time, Bitcoin is, of course, evolving. It's on its way to becoming a true safe haven asset like gold, something that's a little less impacted by short-term dollar moves. But Bitcoin's still a baby and it still reacts to these things, okay? And we're not there yet. Maybe Bitcoin's a teenager, it's not a baby, but still, it's got some growing room to go, okay? And while Bitcoin is building resilience, altcoins are still definitively at the mercy of macro forces, right? If the dollar continues to rally, which I suspect of at the moment that it's not going to be the case, don't be surprised if alts take a big beating, though, if we do see a big dollar rally. And here's the bigger picture. Even the dollar's flexing right now, it's still a long-term depreciating asset. I mean, it's garbage. Okay, it's going to go to zero purchasing power wise. The purchasing power of the dollar just keeps eroding year after year, and that's not going to stop. It's only going to continue. It's only going to get worse. That's why people keep saying everything feels more expensive than it used to be, because it is in dollar terms, okay? Gold terms, not so much, actually. But Satoshi saw through all the fugazi, through all the bullshit. That's the whole reason Bitcoin's created, to offer an escape hatch from the fiat system that infinitely bleeds value over time. So yeah, the dollar might be strong in a very short-term bounce, but zoom out, it's going to zero, and the dollar index will continue down for some foreseeable time as the downtrend continues and will be good for our risk assets. Bitcoin, it's only going to go higher. Back in 2016, it took 664 BTC to buy a $300,000 house. Today, less than 3 BTC. crazy. That's not just price action, that's purchasing power. That's a once-in-a-lifetime opportunity to position yourself in the next store of value. So, should we panic when the dollar shows strength? Well, unless you're 100x long on dog coins, not really. The dollar isn't disappearing overnight. It's still the world's reserve currency and probably will be for a very, very long time. But Bitcoin, it's the end game. One day, it won't just back up your portfolio, it might just back up the fiat system itself. Thanks for watching.